This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. It's an important morning after an important event last night. We're coming to you, as always, from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia, and Surabhi is with us today as well. Guys, hi, good morning.
Hi. Good morning, guys. Good morning. Well, so much to reckon with this morning. Of course, what happened with the US Fed, the pause and the expected, rate hikes, etc. But before anything, I just want to mention that Cyclone Biparjoy is, the update on that is that the Indian Navy is in standby in view of approaching the cyclone. And at this point in time, I think it's expected to hit Kutch very soon, and of course then move towards Pakistan. So hopefully everyone stays safe. Hopefully all the rescue operations pan out as planned, and there are no major issues, injuries, casualties, etc.
Absolutely, absolutely. By the way, Surabhi, I think was awake last night, Sonia, watching the Fed and parsing through the statements, etc.
I'm promising I'm turning a new leaf. I decided I would only look at things at 5 a.m., which is what I did, Prashant.
Prashant, that's your forte. That's what you do generally.
The last I did it was during the global financial crisis. I stayed up many nights, I can admit, but that's a long, long time ago.
Yeah, even for me, it was just this mini banking crisis of sorts that we had. That's the only reason. Otherwise, we'll deal with the Fed.
All right, well, let's just get down to it in terms of what you need to know. Now, it was a peculiar pause from the Fed. It was an expected pause, but I'm calling it a peculiar pause, and I'll tell you why. There was no hike in June, but it was almost as if to make up for the no hike, they kind of went, not overboard, but they went excessively hawkish. They said, they clearly said that there are two more hikes which are penciled in this year, in 2023. Now, that is, more hawkish than what anybody really thought. The terminal policy, which is where the Fed, the rate will peak off, according to their own projections, now stands at between 5.5% to 5.75%. And the outcome is more hawkish than most mainstream economists out there. Actually, people will now, after this, and it's peculiar because they'll have to do this in a meeting in which they did not do anything. Most economists will have to take up their expectations of the terminal rate a little up. Some by 25, some by 50 basis points or so. And that's the reason why I'm saying that this is a little more hawkish than what many expected. Now, US markets, right? The reaction is always interesting on days like this. They sold off. You had yields which ran up very, very sharply. You had stocks which sold off. But by close, there was a big recovery, which essentially was afoot. So from the intraday lows, it was a flat close day on day. But from the intraday lows, the S&P recovered about 0.8%. The Nasdaq recovered 1.2% or so. Market interpretation changes. And by the way, it doesn't just change during when this is happening, but usually what I've observed is, on day two, sometimes the reaction is dramatically different as compared to the D-Day, on the day in which, you have a big data point or the Fed decision, etc. But more on that in just a bit. The two-year Treasury yield, this is the closest to what the Fed rate is. In terms of behavior, it moves the closest. It ended at 4.69%, some 13 basis points off the intraday high. So as we got into the market close, the market perhaps thawed a little bit, and they were a little less panicky going into the close. Now, what does this mean for us here in India? As I said, we are very close to all-time highs. We're 160, 170 points away as of yesterday's close. We've also yesterday had a nice rally which left us just under the previous high, which is 18,778. We left off at 18,755, so just 30 points away. So that kind of becomes the first kind of, not resistance, but that's the first level to take out on the way to the next 100 points, which will get us to the all-time high of 18,887. There's not very much in terms of, you can look at hourly averages, etc., but there's no point. You're just there, almost there, in terms of a new high, less than 1%. On the way down, of course, the distance is more now, but 18,555 is important, and the 20-day moving average of about 18,500 will be levels to watch, which will need to be defended if there is any shakeout which starts to appear. On the banks, the Bank Nifty is pretty much stuck in a range. So once again, for the third or the fourth day, it closed around the 20-day moving average, which left off at 44,003. We left off at 43,988. The 20 days at 44,003. So the 20-day is the first kind of level to defend on a closing basis. You don't want a meaningfully large close under it. And then the recent low of 43,874 will be important on the way up. I mean, 44,500, 44,499 is the level to take out on the way for the Bank Nifty to actually accumulate more gains. But I would say this, I mean, the SGX, I think, is not showing us very much in terms of activity. It's not, nothing is really changed in that sense. The reason why the Fed paused and it's indicating more hikes is the fact that it is seeing the US economy to be in a pretty good and stable kind of shape. Here in India, I mean, you can argue that maybe the recent rally has been very feverish, so people are concerned about the pace of the rally, but fundamentally not very much has changed. So the date with the new all-time high is still very much there. But if you're trading very short term, as I said, sometimes the reaction is on the day of the decision, but also on the second day, because the market starts to come up with new theories about what they said and what it could mean, and projections change, etc. So be careful. No need to chase if you get a sharp. I mean, if this changes dramatically, if you get a sharply higher start, no need to chase it. If this extends a little bit more on the downside, then maybe that gives you a better entry opportunity by 9:15. So 18,806 is where the SGX is indicating an opening at. Sonia.
Absolutely. And the market has rallied for quite a bit, right? I mean, It's been 3 straight days of a rally up until now. So some caution perhaps won't harm anyone. Given that, having said that, this has been a buy on dips market. So eventually, of course, it's just a matter of time before we get to all-time highs. Remember, it's been a smooth run up until now. The Nifty is up almost 11% from the lows that we saw in the month of March. And now we are less than 150 points away from all-time highs. So it's just a matter of time before we get there. But purely for today, some caution could be taken on board, given the kind of run-up that we've seen. However, foreign investors continue to buy in cash, and 3 days running now, the numbers have been pretty large. Yesterday as well, FI has bought almost 1,700 crores. Put together, it's over 6,000 crores of buying in just 3 trading sessions from foreign investors. All the domestic institutions have sold about 650 crores. So the money flow is coming in quite well. Now, just one word on the US Fed. A lot has been said, of course. The Fed has held off on rate hikes, but they've also said that 2 more are coming this year. And they've said they will take another 6 weeks to see the impact of the policy moves and whether inflation is under control. So you never know which way things could head, and that could bring about some amount of uncertainty in the market as well. Now, in stock action today, I'm watching out for a couple of things. One is Axis Bank could be in focus because sources indicate that Bain Capital is likely to sell stake up to $267 million in a block deal. So keep your eye out on that. The 2 other pockets which have been doing very well and have come out to be leaders of this market. One is autos, of course, new highs, day after day over there. And the other is metals. The Nifty Metal Index has come back in a big way. And yesterday as well, we saw some big moves over there. In fact, for the month of June so far, JSW Steel is the biggest index gainer. It's up almost 11%. So I'm going to keep my eye out on that pocket as well. But give and take everything, the SGX Nifty is hinting a muted start. And we've had 3 days of gains under our belt. So perhaps some cooling off would not harm anyone.
Perhaps, yeah. I think we saw a bit of that caution already start playing out yesterday. And the large cap space was muted. We didn't have a wild mid cap rally as we've seen in the last couple of days. Yesterday was a quieter day for mid caps as well. By the way, just want to point out the action on the currency and rates market as they also digest what really the Fed is indicating. And Prashant, completely take your point. Many times we get the real sort of follow through or the real reaction a day later. So let's say futures right now, Wall Street futures are mildly negative. The dollar is higher. It dipped below 103. It's gone above 103 again. And the 10-year yield has now inched up to the 3.8% mark. So let's see how the markets kind of parse through all the announcements and the trajectory from here on in the July meeting. So that's as far as the global picture is concerned. Speaking of central banks, while the Fed is sounding a hawkish note, the Chinese are going ahead with their cutting plans. Now, what we've seen is there's a rate cut in the medium-term lending facility, the 1-year lending facility in China. PBOC announced this just earlier this morning. This follows up on the 10 basis points rate cut that we saw on the 7-year reverse repo earlier this week. So this one also is just a 10 basis points cut, but it's indicative of the mood and the mindset perhaps in the Chinese market. It is the first such cut in 10 months. We know what happened to the metals market and what's been happening. Just want to put things in context. I mean, the Nifty is up just about 1.2% so far in June. The metals index, the Nifty metals, is up almost 5.5%. So this wild rally, which is entirely based on stimulus hopes from China, that continues unabated. So let's see if we'll get any follow-through today or not, because while the Chinese Q is positive, the Fed Q is negative. That's where there's lack of clarity on, what the Western central banks are going to do. So that's something to watch for. Just want to also point out the FII numbers. Didn't mention this. Should have put this up on the data board as well. We had almost 48,000 crores of flows come in the month of May. So far, we are halfway down June. That number's come down to 11,000 crores. We need to watch for the flow situation as well, incrementally, whether June is going to be as huge a month as May was. Finally, on stock-specific action, we'll watch out for the HDFC twins. Now, there's been a lot of chatter in the market since yesterday. There's been a Reuters report suggesting that there is some disagreement between SEBI and AMFI, the mutual fund body, in terms of how you will look at MF holdings on HDFC Bank when the merged entity starts trading on the exchanges, which should happen in just a couple of weeks from now. The sense that we are picking up from the mutual fund fraternity is that they're saying there's no need to panic. This should be fairly managed because there's a 30-day window that's being offered from the day of the merged entity listing and trading on the exchange. MF seem to be suggesting that 30 days will be enough to do a rebalance. It shouldn't lead to too much of market volatility. AMCs can do this rebalancing within their own schemes as well, though it'll have to go through the exchange. There will have to be order matching. Anyway, short point, the MF view right now is there's no need to panic. This should be well managed without excessive volatility on these stocks. But of course, we'll have to wait and watch and see how that plays along. So I guess, folks, plenty to keep us busy all through the day today.
A long, long day ahead, right? But I think for the market, one event is out of the way. Yeah. So perhaps they can decide which direction they want to take. By the way, a lot of Asian markets are doing quite well this morning. So Hong Kong is up almost 1%. China is well in the green. So let's see how our markets take that forward. But on the Fed decision, we have a comment coming in from Eric Fishwick of CLSA, who says that the Fed left rates unchanged at 5.25%, but raised its guidance for encompassing rates at 5.75% by 2023 end. They raised their terminal rate forecast to 5.5%, but expect the last move to 5.75% will be unnecessary.
Okay, some more views coming in. This is on equities. Mahesh Nandurkar of Jefferies says the headline Nifty earnings growth projection of 20% for FY24 appears high, but a slowdown in domestic earnings growth from 30% in FY23 to 19% in FY24 is already built in. Margin expansion is an earnings driver and has added 5 percentage points to FY24 earnings growth. Auto, staples, cement and metals are expected to see the biggest margin improvement, primarily on decline in cost pressures. We stay overweight in domestic cyclicals, financials, property and industrials.
All right, let's also get you some money market views this morning. On the rupee, Parul Mittal Sinha of Standard Chartered Bank says the dollar INR slipped below the critical threshold of 82.10 to 82.20 on the weaker dollar, rally in risk assets and positive FPI flows last week. She expects the dollar INR pair to trade in a range of 81.75 to 82.25 next week. She adds that the dollar trend remains in focus post a hawkish FOMC and ahead of the ECB policy decision where a 25 basis points hike is expected.
On bonds, Parul Mittal Sinha, Standard Chartered Bank says bond yields continue to trade range-bound despite rise in global rates. Soft CPI print in line with expectations and the MPC outcome and good investor demand provided support. She expects Indian benchmark 10-year to trade between 6.9 to 7.05% range next week on higher global yields post a hawkish FOMC, which paused as expected, yet left room for 2 more hikes in 2023.
All right, well, that's on the market outlook. We also have lots of specific stocks to track today, and we'll get to that in just a bit in our special segment. Today, we're looking at Axis Bank, SJVN, Swandana, Spurti, M&M, KRBL, HCL Tech, and V-Mart. Those are on the back of positive news flow. Then we also have DCW, KFin Technologies, as well as Aavas Financiers. They have some negative news flow around them. We'll tell you what it is in just a bit.